9 minutes to the closing bell, and we've got Mitch Roschelle. He is Macro Trends Advisors LLC founding partner. Good to have you here, Mitch. Gotta ask you, we talk about this incredible housing boom with low interest rates. How big an impact are those low interest rates going to be on the banks when they start reporting their earnings later this month?
I think just to sort of break that into two separate issues, I think as it relates to the banks, the trend of interest rates is going up, right? So the 10-year Treasury, it wasn't too long ago, it was in this year that it was 80 basis points. Now it's 90 basis points higher. So I think the trend line for banks is good. They're still, paying nothing on certificates of deposits, and now they're making loans at higher rates. So I think from a bank earnings perspective, we may not see it in the first quarter earnings that we'll report next week, but I think over the course of the year, I think that's a good story. For housing, where prices have gone up like crazy, higher interest rates not necessarily a good thing for buyers who are now stretching because prices are going up at the same time.
Mitch, let's talk a little bit more about what's going on in the housing market, because we've seen home values continue to increase here now for quite some time. Median sale prices are also trending higher in a number of major cities. How long can something like this last?
You know, Shauna, I've called it a boom and not a bubble. The question is, when will I, use the new B word and call it a bubble? We're seeing double-digit price increases nationally, and then in some places like Florida, and I've got a lot of firsthand experience there, the suburbs in New York, the suburbs in some other cities across the country, we're seeing 20% price increases. That is not a sustainable trend. So I think at some point there's going to be resistance. But here's what's happening in housing. I call it the 3 A's. You have affordability, which had been an issue and it's becoming a bigger issue, availability, and last is appraisal. And the reason why I bring up appraisal is some people are buying homes and finding that the bank will not appraise them for what they paid. So I think there's a little bit of a reckoning that's going to happen in the next month or so. Hopefully we see more inventory on the market, and that will prevent a bubble from happening.
Mitch, I met you back during the last reckoning after the, that home spending splurge that led to the great financial crisis. Why is this time different, if it is different?
Adam, you can look at the headlines from this past weekend. There's 2 Wall Street Journal stories on it where lending institutions are not making credit as available. If you look at the median FICO score in the fourth quarter, I think it was, and I'm doing this from memory, 783 compared to a year earlier when it was 770. So banks are getting way more stringent in terms of their underwriting standards. And moreover, investors, which drove the financial crisis, and were the bulk of the home buyers, those people buying homes and flipping them and the like, those folks are finding it harder and harder to get a loan because Freddie and Fannie are hip to it and aren't extending credit to people who are not, owner occupiers for their first residence. So I think what you're going to find is the good news. This is one of the only times where the system doesn't want history to repeat itself. And the whether it be institutions or Freddie and Fannie, they have the financial crisis in the rearview mirror, and they're imposing restrictions, making it hard for history to repeat itself.